Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, January 8th, 2021. Doing the video now because we do have some developments worth noting, particularly in the currencies, and then what I want to do in this video is tie in and hit on some of the other assets that may be impacted or will likely be impacted, or in this case already are being impacted by a change in trend in the currencies. Remember, starting out on Monday this week, I outlined a few things: treasury bonds, the currencies, mainly the dollar and the euro, and the stock market, and showed you the correlation there. But there's other asset classes. Gold I often talk about as being correlated to the dollar. Gold tends to rise with a falling dollar and fall with a rising dollar. So you have that inverse relationship. Very simple. Where the gold we're trading, if you're here in the U.S. buying gold, gold futures, the ETF GLD, a gold bullion, you're paying for it in U.S. dollars. So if the dollar is strong, it takes fewer dollars to buy an ounce of gold. And if the dollar is weak, it takes more dollars to buy the same ounce of gold. Again, all other things being equal. So we'll start out here with, today, what's the most important development? 2 days ago, the most important development was a breakdown in treasuries. Today, we have a breakdown in the euro. Now, I'm going to go over this here. I'm going to go over several different charts. I like to give, especially in this market, there are trends that are more resilient than other trends. So what's been resilient? The trend in the stock market lately, the trend in, the falling dollar, the rising euro. So I'm going to go over all these levels to watch. We do have a breakdown on E7 Euro futures, but there's a little bit work to be done on some of the other Forex pairs. I'm going to go over all those charts now, and then I'll roll into some of the other commodities like gold's being hit hard today, the other metals, platinum, palladium, copper, and so I'll hit on those. And then I also want to talk a little bit on the agricultural commodities and commodities in general, trade that I've been very bullish on for quite a while now, but we're getting really heated in some of those, and might be time to start tapping the brakes on some of those, like the grains, for example. And then there still might be other opportunities elsewhere. So, all right, let's dive in. There it is. This is the primary trend line in blue. That's again the one coming off the November 2nd lows right there. That's the one I've been waiting for. And we have a breakdown, and we are currently back testing. So there's a breakdown, and it's not mere coincidence that when the euro broke down, because traders watch these things, at least I do. Like I said, if you're trading gold, you're remiss, in my opinion, not to watch the U.S. dollar and the euro. So you can see what happened there. Here's that trend line I mentioned the other day. We put in a divergent high on gold, just like we did here, just like we did here, just like we did here, and that's what you get. You get these corrections after the divergent highs, even during an uptrend. But then what's more important, as I said, is you correct during an uptrend, and you come back usually to the uptrend line. But then when you break the uptrend line, now that's a more powerful sell signal. So the euro broke down today, and then gold also broke down, and it fell, and it just hit that or close enough to that 1855 50-ish support right there. You can see it had reactions along the way. Most of the levels I had here, my 1880 50-ish level, we had a bounce. If you can, you'd have to zoom in. I know it's hard sometimes in the video if you don't have a big monitor to see, but that's what it looked like on the way down. So boom, impulsive drop, kick back to that 1896 support, which it sliced right through. Support once broken becomes resistance. Then we went down to the next level, and so forth and so on. But the main thing was there was your sell signal, and there was that bounce trade op I told you the other day when we fell down, hit that was my initial target, and I said you can reverse, cover short, go long there. I posted gold up here the other day, right about here, saying that's where I thought it would go down to, because we were at resistance on gold, overbought with the negative divergences. Actually, the divergences came shortly after that post, but there it is. So that's what's going on, and again, largely, in my opinion, due to the breakdown in the euro. But again, let's give it the benefit of the doubt for now. In other words, it is a sell signal, but not a hard sell signal. Why? Well, here's the dollar futures, DX, and you can see that they have also Well, they're trying to break out. They popped that 89, 939 level, but we're right back down. We're right on the trend line right now. So it's not a confirmed or a solid breakout. Not the type I like to see. I always talk about or always use the term, a solid or convincing or impulsive breakout. That's not what that is. It was a pretty clear breakdown in the euro, currently back testing, but the dollar has work to do. So bottom line, keep it simple. I think if we can take out today's high and the dollar futures, and guys, if I didn't mention it, usually you'll see in the upper left-hand corner what I'm talking about, DX, that's US dollar futures, and you can see the time frame on my charts if I fail to mention what I'm looking at there. So there's DX, hourly chart. Again, it's a setup I've been talking about, so I'm not going to beat a dead horse. I've been talking about this all week, and actually for weeks now, setting up with these positive divergences, and it's a unlike treasuries, which had a symmetrical triangle pattern, and those I consider indecision patterns. Some people will call them continuation patterns. Other people will call them reversal patterns. But triangle patterns to me are typically indecision patterns that can and will break either way. I mean, just like when you have a triangle pattern, you're approaching apex. So no matter what, you're going to break one way or the other. And more often than not always, but more often than not, it's impulsive because of that energy building process there. Now, a bullish falling wedge, this is where I'm going, is only a bullish setup. It's not a bearish setup. Doesn't mean it must break out. I need to be very clear. These patterns can fall apart or fail to materialize, and eventually the divergences go. But that's what is the most likely scenario there. So there it is. There's what we want to watch. You want to see the dollar index take out today's highs. You want to see E7 euro futures also on the 60-minute chart. You want to see a rejection on the back test of the trend line, and the more impulsive it is, the better it is. As a sell signal. I added, I believe, since the last update, a first support level right here, about 121.94. So there's your, if you're trading euro futures, likely path if we continue to get this. But again, I know a lot of you don't trade currencies, and I will when the opportunities are there. Spends, but I like to track these. For other related assets. In this case, I'm watching, if we continue to see this. See, here's the thing. I can tell you right now, I know the majority of traders, especially retail traders, are oblivious to the impact or the effect that currencies have on the stock market. So what I think will happen, we could see the euro start to move lower, impulsively lower, the dollar start to break out, and the stock market continue to rally for a little while. And to me, that's an opportunity, because then we'll most likely play a game of catch up to the downside. Gold traders are a little more acute or tuned in to the relationship between the dollar and the euro, and that's why I think you've seen gold take it on the chin today because of this. This is early cracks, if you want to call it that. All right, a 60-minute chart of euro US dollar. If you don't have futures charts, you can track this chart right here. Here's a trend line I have going back to December 9th right here on the euro US dollar pair. You can get this on TC2000, which I'm using here. Freestockcharts.com is this company, same company that without the paid subscription. And TradingView also gives you the euro US dollar, I think in real time, if I'm not mistaken, even with a free account, or you can have the paid account with them, and many brokers will give you that as well. So there it is. Close, but see what I'm saying? We broke down here on this one. Remember, this is the euro, US dollar pair, where before I showed you the euro futures, but then the euro US dollar index, and this is the euro US dollar pair. So a little bit of work. We're below the trend line now. You just want to see, again, probably keep it simple. I hate to oversimplify things, but I think a break of today's lows should do the trick and seal the deal on the breakdown. And then when you look at the daily chart, you can see it's also starting to crack. This is my BOD, or benefit of the doubt trend line, and we're right now trading below that on the daily time frame. So again, if we can take out today's lows, it will be, I think, become apparent to most who track the currencies that the breakdown has happened. And then where the financial markets work, sell programs, especially from the institutions, should pick up on that and realize, hey, if the dollar's reverse course and the euro's reverse course, then there's a good chance the stock market's going to reverse course. But until then, if you don't want to wait, like I said, or you would have had to have been watching this closely. There was your opportunity in gold with the breakdown. Gold traders kind of taking profits. Plus, gold also took out the trend line as well. And again, not mere coincidence they lined up. Let's look at a few others. Some that I've highlighted in recent weeks is copper. These are copper futures, HG. We had by all counts, looked like a nice clean breakdown and back test right here. This was my primary uptrend line. HG or your copper futures. Hourly candles here, bearish rising wedge, breakdown back test. And as I said on this one, and I also mentioned if you don't trade futures, CPER is the ETN that tracks copper futures. But I did say that the success of this as a swing trade or failure will depend largely on the stock markets. The stock markets continue to rally, S&P putting in new highs, and that's brought copper prices up. Why? Because copper, unlike gold, which can catch a flight to safety bid, people don't hoard copper when there's market volatility. Copper is used, it's an industrial metal primarily, and obviously with the housing market been booming, stock market goes up, the housing market goes up, and the demand for copper goes up. But again, one that I'm watching, and bottom line, that early signs of a potential breakdown, and again, a little confirmation to be had today on the euro. And a breakout in the dollar. If that sticks, then this will, I believe, continue to play out. So I think you can call it an aggressive or early shorting up here. There's a breakdown, and it is a breakdown in copper. It'll be confirmed, so maybe a half position, or if you're conservative and you want to wait to see if the euro takes out today's lows and the dollar takes out today's highs. But if by the time you get there, if it looks like it's about to happen, this sucker can really fall. And you can see my targets. First target, more of a target zone here with these three levels in close proximity. If and when that lower level goes, that opens the door to these some of these deeper targets there. And for ETF traders, CPER or ETNs, that's it. Breakdown, a little kickback rally. Sometimes you get that. And the divergence is still very much intact at this time on copper. So just a marginal new high. Really, since the breakdown right here, right now we're only up 1.84%. So if you shorted this one, you're still fine. You're below most reasonable stops. Again, it depends what your target is. If you're targeting the $18 level, that's a 20% drop. You could easily use a 5% stop loss or more. 5% stop loss would give you an excellent risk-reward ratio of 4-to-1. That's 5% is 1 unit of loss compared to 5 units of or 4 units of downside if you used a 5% loss. So a 4-to-1 risk-reward ratio. And here's platinum breaking down today along with gold. That would be my minimum preferred swing target just above the 93 level. That's PPLT. Again, for you ETF traders, and I have PL over here somewhere. PL, Platinum Futures. So you can see it's been building divergence for a while now. Negative divergence here. I'm drawing some quirky lines, but you get the point. You can see indicators moving lower with the prices making higher highs. That's your negative divergence. There's a trend line. You can play around. You can put it a little bit tighter there and say that was a whipsaw, or you can give it the benefit of the doubt. Either way, we're starting to crack there. So looks like some downside to come on platinum futures as well. Again, and if look, these would prove to be whipsaws if that euro snaps back up, euro futures snap back up of the trend line, the dollar fails to break out. So that's why I started there. And there's, we'll call them contingencies on these trades. But I almost forgot silver. I usually cover silver with gold, and I always get a lot of questions on it when I don't. So there it is. There's your same comparable uptrend line on gold. There's the same divergent high. Sometimes I'll skip it when the charts are mirrored. There are times, and I've covered these in the past, where there's great trading opportunities when the gold to silver ratio really spikes. In other words, silver is either overperforming or underperforming gold, and there's some great opportunities because there's usually reversion to the mean. When silver's been underperforming and then the charts are constructive, I'll go long silver, and vice versa if it got ahead of itself. But they've been mirroring each other, and this chart was almost identical, is almost identical to that GC gold futures chart I told you, with the comparable uptrend line, the divergent high, and then the breakdown today. And this is a 3-month hourly chart. Where does it go? That'd be for support somewhere around right there, give or take. Again, if the breakdown sticks and we see more downside, about $25. Otherwise, if euro snaps back above, euro futures snap back above the trend line, the dollar continues to move lower, I should say, you probably see the buyer step in. They could rally back all the way up for a test of the trend line. We'll see, but it's a pretty solid impulsive breakdown right now. And for those of you who like to trade palladium, PA is the symbol for the futures. This is a 2-hour bar, 2-hour candles, and you can see just, it's been in a sideways, locked in a sideways trading range for quite a while. This is the bigger picture here, this sideways range. Bottom of the range is roughly 2207, but even within that range, you get these little uptrend lines. They're pretty clear, and boom, you get a break of the trend line. There's your shorting ops, and you can, so far the MO has been to short it back down. This one got a little bit above the top of the range, but before all is said and done, there was a secondary trendline break. It tends to go to the bottom of the range. So what's your logical target? There it is, 2207, give or take. If so, that would be a drop of about 6%. This is a big contract too. If you've traded it, put many thousands of dollars in your pocket if you hit that target on a single contract of PA. Quick update on natural gas. A couple weeks ago, mentioned as a pot shot, oversold trade there with targets, initial target up here, secondary target, the trend line, which was hit, broke the trend line. The next target was a backfill, the gap. I'm referring to this gap right here that preceded where I covered it. Hit that and went on, and I added these lines, and you can see this was the maximum line I gave you on the last I don't know when update here, and I also gave you a trend line there to watch that would keep it above trend, and that's it. We took out the trend line, so we hit what I listed in the last update or last couple updates, my final target 2762, and then after reversing it, we took out this trend line. So active trader, and we also did it with some divergence in place there. So active traders, it might not be too late. You're not at the highs if you didn't take profits there. And I also mentioned maybe that the longer term charts are constructive. So if you're willing to ride out a pullback, natural gas is volatile. You may get another thrust up there, but I just wanted to mention active traders. That's chances are at least for the near term, I think that's most of the gains have been milked out of this the rally from the oversold bounce. All right, that's natural gas. I probably should mention crude. I don't want to go all over the place because I wanted to hit on some of the ag commodities. Crude continues to move higher, but some big divergences building. I don't have a great trend line, an uptrend line. I do have this trend line right here that could do the trick, but it's going to take a while to get there. So a little minor trend line here, and I think if we can get that a good rally going in the dollar and a breakout that becomes obvious to all or most, and a good breakdown in the euro, I think that will be the trigger too to bring crude down, because crude can also be, at times, it's kind of an on-off correlation, but mostly for the same reasons that gold is often dollar sensitive, because crude, at least this crude rate, well, crude around the world actually is based in U.S. dollars in the crude trade. So the dollar, same thing, rising dollar, fewer dollars to buy a barrel of gold, and vice versa. Okay, I'm doing okay on time, so I'm going to rifle through some, not all of the commodities that I've highlighted in recent months. Cotton getting stretched, hell of a run up in a lot of these ag commodities. Again, I've been talking about the inflationary implications of this. They've been great. I've made it clear for a while that's where I feel much more comfortable, did. Now at this point in time, we're getting a little bit stretched in a lot of these. So where I'm going, and maybe again, time to tap the brakes. What does that mean? Longer term investor, if you're looking at what I believe is probably the early stages of a new bull market commodities, you may want to just ride out the pullbacks, not try to get cute and game all the zigs and zags, because that's where it can get difficult. Active traders might want to take some profits and cycle back in at lower levels, or at the very least raise and tighten up your stops. For example, sugar, this is the ETN. To keep this video under an hour, I'm not going to go over. I just don't have time to go over the charts of all the futures as well as the ETNs. I struggle with that because I prefer trading futures, but I will trade these ETNs at times, and I know a lot of traders prefer them. So I just want to say that that was the highest target I had back here from an official trade, 47, but I've had a line here for a while at 48.90 is my maximum. That's a big level for sugar. That's where over the last couple of years here, every advance has stopped. Big resistance, and we did it with negative divergence and overbought. And we hit it just yesterday. Again, I've had that line here for a while, and there it is. We're starting to pull back. So if you didn't do it already as an active trader yesterday, that's probably not a bad time to take some profits. Kane is another one. Chart looks a little different. It's a different ETN company, but same thing. Divergence is building. Another sugar ETN. I'm sorry when I say that. I'm talking fast. Cow. If the grains pull back, you could see a rally in these the cow, which has hogs and cattle futures in it. But it's been bouncing along. I've talked about it for a while in this trading range here with 34.91 as resistance and a downtrend line here. So kind of near-term neutral. Again, if the grain's correct, you might get a lift in the in this ETN because it helps lower input cost. When the grain prices go down, you got to feed the cattle and the pigs. But maybe I'll have to look at the charts. Let me just say that LE and live hogs, lean hogs, and live cattle. I'll have to look at those charts. UNG, I think I already covered. Yeah, I covered NG, natural gas. And if you trade UNG, these are the levels I gave you recently on the daily chart. We hit same thing. We hit my 987 target. We did take out the downtrend line there. It's not a super well-defined downtrend line, but we hit price resistance. And again, longer term, I still like natural gas. Near term, since it took that trend line out on the 60-minute chart, and it's had a heck of a run up since that recent oversold low entry, that pot shot trade. Maybe time to take some profits there. Like I said, this is palladium. I already covered palladium in the futures. USO, I already covered crude oil in the futures. UGAs, natural gas. I'm just clicking a watch list, guys. It's off this. All right, here's soybeans. Soybeans have rocketed. Again, I've talked about it down here. That was where the buy signal came. Big divergent low. Breakout. I mentioned early on, here was a trend line. You could buy pullbacks too, and that last pullback there, it just never looked back. But you talk about overbought. Yeah, I would definitely start tapping the brakes on this one. You can keep a momentum trend like this going. Just keep raising stops every so often if you want on the way up. But I'll have to look at the futures charts, but I'm going to probably see the same things there. Extremely overbought, and at least on this ETN at resistance. So and that's also benefited JJG. I've harped on this one for months now. Throughout last year, is an easier one-size-fits-all. If you like, the things that I was highlighting, corn, soybeans, and wheat, all of which I was bullish on, instead of buying each one, you could just buy this ETN because it tracks those three: corn, soybean, and wheat. And you can see it was just a beautiful bullish falling wedge, breakout back test, and boom, never looked back. But again, getting very stretched, so I certainly wouldn't be buying it at this point in time. I will keep an eye on these. If we get a nice pullback and get an objective entry, I will certainly mention that because I remain longer term bullish on these guys. Wheat, same thing. It's had a nice run up. Hit and exceeded the maximum target, and it's also broken out. So longer term, the breakout was constructive, and I'm talking the breakout of this multi-year basing pattern right here, trading range. We're back testing now, but we did just put in, let me mark it here, negative divergence. So again, I'll have to look at the charts of wheat futures, and I've been looking at those recently in recent days, but I'll do a more specific update to the ag commodities in a separate video. I wanted to kind of just brush over everything here and just say, hey, maybe time to hold off, wait for pullbacks. Let's see what wheat does. Yeah, I might normally say it's an objective entry here on the back test at the top of the range, but if those other grains, especially soybeans, which have just gone to the moon, if they have a sharp pullback, it's probably going to spill over into wheat. Corn, same thing, heck of a run up. just hit and exceeded my fourth target there, 1534, and hit that next resistance line that I had at 1604 right there. That's resistance. Each and every one of these lines are. I'll turn that up a little brighter. So again, more of just an overbought thing. We had divergence, burned right through it, but we're extremely overbought. We haven't been this overbought in years, if not decades. And again, that speaks to what I've been talking about. This is an extreme overbought condition at this level with that RSI at, where were we at recently? The RSI hitting roughly, where is it on here? 87 is bull market action. You don't see that in a bear market, an RSI hit of 87. That's usually early stage bull market action. All right, so JO Coffee, I've liked this one for a while, still do, but again, you got to look at these little swings, even within the trends. Coffee's been in a big trading range, but you get the divergent highs, take some profits, get out or short, and then turn around, look for the divergent low. That was our last buy signal. I highlighted it there, and we've been moving up, but we've been building negative divergence. In fact, the divergences have started to play out. Took us back to this, that's a former target. We've had that. That was a price target here. In fact, every time we came down to this level, I mentioned it and listed the same price targets, or might have changed the numbers on them. T1 back here, and then here it was T2 because we got into the lower level, so T1 was down here, and T3 up here. So that's it. Just kind of maybe check things a little bit on commodities, hold off, and turn around. I think where the opportunities are going to be as soon as the stock market. And let me see if there's anything else I want to cover here before I get off there. No, DBA. Yep. Remember, this was a one-size-fits-all commodities ETF that I told you about, and you can see we're right there, a little bit below that 1640 target. Downtrend line as well. So I'm going to wrap this video up. I'm just going to revisit the euro. I can see it moving down. I don't know if you can make it here. Since I started the video, we are being rejected there. Let's look at the dollar real quick. And what I'm trying to do is not just cover all these charts, but tell you where the trading ops are. Dollar, I need to refresh this chart. It's the only one that I have that doesn't auto refresh. There it is. Close. A little more work to be done. And EUR USD, and then I'm going to wrap up with the stock market and where some opportunities are there. There it is. This one's breaking down on this daily time frame here, and then that 60-minute time frame as well. So where are the ops going to be? I already told you, stock market seems bulletproof, but I think that's where some opportunities will be. These divergences have only continued to build. They're not taken out yet. 60-minute divergences. Actually, it did. On the PPO, not on the RSI. Divergence is still there. This is NQ, and there's well, I don't need to turn on volume. I wanted to toggle the candlesticks over so you can see it a little bit better. So again, it's more so, it's as much as what I see in the charts here, but very much what's going to happen with the dollar if that plays out. And here it is. This is the one I wanted to show you. So we popped that. We took back the trend line, the blue trend line, and we made a back test right now, perfect back test of this. Remember, the white trend line is your primary trend line. That's a longer term trend line. That comes off the November 2nd lows. That's where the euro also bottomed and the dollar topped and have been in a downtrend. So there it is. Like I said, the fact the market has been so bulletproof, I think there's going to be a nice shorting up coming up here. And some of my favorites, one of them I'll tell you, Tesla. Tesla has got a lot of thin air below it. And, I think it'll be, again, if you want to keep it simple, just, go ahead and short one of the indexes once you start to see if you can see the euro start to rally, clearly put behind today's lows, and the dollar also break out above today's high. Okay, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart, and you have a great day.